Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we will discuss one question of stock ledger where we are also required to calculate profit on the basis of stock record. Company keeps record on FIFO and weighted average basis from the following transactions. We are required to calculate cost of goods sold and profit. Purchases March 2014, 1st March purchase of 500 units, rate is 18. 4th March purchase of 700 units, rate is 20. 9th March 900 units, rate is 18. 15th March 300 units purchase at the rate of 25. 25th March 200 units purchase at the rate of 20. 31st of March 500 units purchase at the rate of 25. There is sale on 2nd March 200 units at the rate of 22. On 7th March there is sale of 500 units at the rate of 25. On 11th March sale of 400 units at the rate of 21. 18th March sale of 800 units at the rate of 28. And on 27th March there is sale of 500 units at the rate of 25. Here details of purchases and sales are separately given. So we are required to record transaction date wise. In such type of question there is possibility of error of missing a particular information because all data is not given date wise. So we are required to record transaction in chronological order, like after recording purchase of 1st March, we are required to consider sale of 2nd March and then again purchase on 4th March. Let us start with first FIFO method. On 1st March there is purchase of 500 units at the rate of 18. So purchase value is 9,000. There is no opening balance. So on 1st we have stock of 500 units at the rate of 18. Amount is 9,000. On 2nd March there is sale of 200 units at the rate of 22. We are going to ignore selling price. We are going to record issues at cost. $200 units are sold, cost is 18. So it will be 3,600. Out of 500 units, 200 units are issued. So balance is 300 units at the rate of 18. 5,400. 4th March there is purchase of 700 units at the rate of 20. So purchase cost is 14,000. We already have 300 units at the rate of 18, 5,400. Fresh purchase 700 units at the rate of 20, it is 14,000. So now we have two stocks, 300 units and 700 units. On 7 there is a sale of 500 units at 25 rupees. So for issuing 500 units, first we will select oldest stock 300 units at the rate of 18, 5,400. From this stock of 700 units, we are required to issue balance units, that is 200 units at the rate of 20. So it is 4,000. Now out of 700 units, we have issued 200 units. So balance units remained 500 units at the rate of 20. So it is 10,000. On 9th March, there is again purchase of 900 units at the rate of 18. It is 16,200. We have old stock 500 units at the rate of 20. Amount is 10,000. Fresh purchase 900 units at the rate of 18. 16,200. On 11th, there is sale of 400 units at the rate of 21. Sale of 400 units, it will be issued from this stock. Rate will be 20 rupees. Value 8,000. Out of 500, 400 units are issued. So balance is 100 units at the rate of 20. So it's 2,000. Next 900 units at the rate of 18. 16,200. On 15th, there is purchase of 300 units at the rate of 25. 300 units are purchased at the rate of 25. So it is 7,500. Old stock, we have 100 units at the rate of 20. Amount is 2,000. Next 900 units at the rate of 18. 16,200. Now fresh purchase 300 units at the rate of 25. 7,500. So now we have three stocks: 100 units, 900 units and 300 units. On 18th, there is sale of 800 units. We have stock of 100 units oldest that will be issued first. We want 700 units more that will be taken from the next stock. 900 units, 18 rupees. 12,600. Now first stock is entirely issued 100 units. Out of these 900 units, 700 units are issued. So balance are 200 units. At the rate of 18. Value 3,600. This stock is not issued 300 units at the rate of 25. Next on 25th, there is purchase of 200 units at the rate of 20. So value is 4,000. We have oldest 200 units at the rate of 18, 3,600. 300 units at the rate of 25, 7,500. This fresh units 200 units at the rate of 20, rupees 4,000. So we have now three stocks: 200 units, 300 units and 200 units. On 27th March, there is sale of 500 units. First 200 units will be issued. Then for balance 300, second stock will be issued. This 200 at the rate of 18, costing 3,600. 300 units at the rate of 25, costing 7,500. So balance units will be 200 units at the rate of 20. Amount is 4,000. On 31st March, there is purchase of 500 units at the rate of 25. So it will be 12,500. Balance units 200 units at the rate of 20. Value is 4,000. Fresh purchase 500 units at the rate of 25. It is 12,500. We can find out now closing stock. 200 units plus 500 units, 700 units. Value 4,000 plus 12,500, 16,500. As per FIFO, we are required to calculate profit. So let us find out the total sale value. So on 2nd March, there is sale of 200 units at the rate of 22. On 7th March, 500 units at the rate of 25. On 11th March, 400 units at the rate of 21. On 18th March, 800 units at the rate of 28. On 27th March, 500 units at the rate of 25. So total sales we got 60,200. In stock ledger we can find out the value of total purchase. We are required to take total of amount column. In receipt case we are required to take total of subtotal of this amount column. So total purchases is 63,200. So here we have total purchases 63,200. Now we are required to find out the profit. Profit can be calculated as profit is equal to sales minus cost of goods sold. Sales minus opening stock plus purchases minus closing stock. Here we have sales 60,200 minus opening stock is not given, so it is nil, plus purchases we have calculated 63,200. We have closing stock 16,500 minus 16,500. By solving this we get 60,200 minus 46,700. 13,500 as per FIFO basis. Now we will try to find out profit as per weighted average basis. On 1st January there is purchase of 500 units at the rate of 18. There is no opening stock, so on 1st March 500 units at the rate of 18, value 9,000. On 2nd March there is a sale of 200 units at the rate of 22. Issues will be recorded at cost, so we will take 18 rupees, 3,600. Out of 500, 200 units are issued. Balance 300 units at the rate of 18, 5,400. On 4th March, there is purchase of 700 units at the rate of 20. So its value is 14,000. Now we are required to use weighted average basis concept. Here we had 300 units. We have purchased 700 units. We are required to add these units. Old stock 300 units, fresh purchase 700 units, total 1000 units. Old stock was having value 5400, fresh 14,000. We are going to add this. It is 19,400. 19,400 divided by 1000 units. It will be per unit 19 rupees 40 paise. On 7th March there is a sale of 500 units. Weighted average basis 19 rupees 40 paise. 9,700. Out of 1,500 units are issued. So balance 500 units. Value per unit 19 rupees 40 paise. It will be 9,700. On 9th March there is purchase of 900 units at the rate of 18. Value 16,200. We have old stock of 500 units that will be added to 900 units. It will be 1400 units. Old stock value 9,700 plus 16,200. 25,900 divided by 1400. Per unit it will be 18 rupees 50 paise. On 11th March there is sale of 400 units. Out of 1400, 400 units are sold. Rate 18 rupees 50 paise. 7,400 is the cost of units issued. Out of 1400, 400 units are issued. Balance will be 1000 units. Rate 18.5. So it will be 18,500. On 15th there is purchase of 300 units at the rate of 25. Value 7,500. While recording stock we had 1000 units. To this we will be adding the 300 units, 1300 units. Value was 18,500 plus 7,500. So 26,000. Per unit value is 20 rupees. On 18th there is sale of 800 units. Cost 20 rupees. So it will be 16,000. Out of 1300, 800 units are issued. Balance 500 units. Cost 20 rupees. Value 10,000. 25th there is purchase of 200 units at the rate of 20. It is 4,000. We had stock of 500 units. 500 plus 200 it will be 700 units. 10,000 value plus 4,000 will be 14,000. It will be 20 rupees. On 27th there is a sale of 500 units at the rate of 25. Cost 20 rupees. Value 10,000. Balance 200 units at the rate of 20. Value 4,000. On 31st there is purchase of 500 units at the rate of 25. So value 12,500. We had 200 units plus 500 units. So it will be 700 units. 4,000 plus 12,500, 16,500. Per unit value is 23 rupees 57 paise. So as per weighted average basis, the value of closing stock is 16,500. Now we are required to calculate profit as per weighted average basis. Some details already we have calculated. We have total sales 60,200. We have total purchase cost 63,200. Now we will be calculating profit as per weighted average basis. Profit is equal to sales minus cost of goods sold. Sales we have to take same 60,200 minus cost of goods sold. We require opening stock. There is no opening stock. Purchases we have to add 63,200 and we are required to minus now closing stock. As per weighted average basis, we have closing stock 16,500. So finally we got profit even under weighted average basis, same amount 13,500. So in this question we have learned how to calculate profit based on stock ledger. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.